Welcome to Trading Lounge and the Commodity Futures Report for Friday, October the 7th. And just starting with the 10-year yields here. Basically what we're looking for here on a monthly chart here, we're looking from the low here and we're moving up through here. So we'll be moving up to 5%. Currently we're at 4%. And we're looking for an impulse wave. So we've got wave 1 here and 2 here, and then we'll have 3, 4, 5. So once we have those 5 waves here, then we'll see an ABC correction, and then we'll see another 5 up. Because we get 5 here, that means we will get a corrective move and then another 5 to the upside. Beyond that, I don't know. We could get a wave 4 back and then another wave up, or there's a few things that could happen at that point. So I can't speculate about that, but in Elliott terms, it certainly appears we'll get 5 waves to this point, and if that is the case, which looks like it will be, then we'll get 3 back and then 5 up. So you can imagine the Fed's going to, or this getting to 5% and then chilling here and then waiting to see what the CPI figures are. So let's just bring this back to the daily chart here to understand this particular structure. It's pretty clear to me in that we have 1 and 2 here, 1 and 2, 1, 2, 3, 4, 5 for the third wave, 4, no, beautiful third wave here, textbook stuff, 4 and then 5 here. So I don't know if we need to call, I haven't bothered with that too much to call the top in here just yet, but we'll just give it a little bit of time. But certainly we're very close to having that 3 in. Then we'll have 4 come back, and then we'll go up for 5 at that point, and then we'll have the ABC as I talked about. So this could be an A wave up here and a B wave here. It could be wave 1 here, wave 2 here, whichever way you want to look at that. I mean, obviously the Feds are focused on the inflation. They've made that abundantly clear, and that means that they're all eyes on the prize of the CPI figures. Will be something that they need to get a grip on, basically. So, and I think that, and I could certainly be wrong, but just double check, I think that the CPI figures will come out on the 13th, and I think the producers one here, this is consumer one as well, I think it comes out on the, producer comes out on the 12th, and the what's the name comes out on the 13th. But it's really all about the inflation. So the focus on the CPI figures will be the big issue, I guess. So all that said, over to the Australian, not the Australian dollar, the US dollar, sorry. I'm going to count this down here as 1, 2, 3, 4, 5. Now, I know that this wave 3 is a little bit, well, just such a smidgen shorter than this one here. But when I look at the euro and the cable, especially the cable, it's quite clear that this is a 5-wave structure down here, a mirror image of this one. So the mirror image is this particular structure here with 1, 2, 3, nice powerful third wave, fourth and fifth. So it is this move here, that this move coming up here, that represents this move down here in this 5-wave structure. So we've been talking about, counting these down here in 5 waves. I've cleaned all that up, and then looking for the A wave, and then back for the B wave, and then up for the C wave. So based on this, when we get to the box up here, I haven't pulled that apart here, but once we get up into the box here, you can kind of expect it to make a turn, and we'll have this move down here. This move will be interesting because I want to see if it's a third wave. I've got it as an ABC, but it could certainly be like a bigger picture down here as well. It could be that we do have a wave 5 top in, and we could be looking at a bigger picture. We'll just see how this the speed of this, if it's going to be a lazy C wave or a fast third wave, and then we'll start to look at that point there for that. But yeah, there's a case for both cases. I won't go into all of that at the moment, but square that up in there. So that's the end of the dollar. We're going to go over to the gold market at the moment. So you know, while that dollar has been moving to the upside in 3 waves, well, then we're likely to see this move up here in 3 waves as well, and other commodities and so on, and other currencies. So that's sort of where we are at the moment with this. So it does appear that we can look at this as 1 and 2 here. There is there's a couple of different ways to look at all of this, but I think this 1 and 2 here and 3 here and 4 coming either to here or to here, and then going up to that point, then moving up. So in a nutshell, to cut a long story short, you see this low here. If that's breached, because this could be counted as 5 waves here, right? This can also be counted as an A and a B and a C to this point here. I won't go further into the intraday to point that out, but that low, if that's breached, then you can expect it to come down for a wave 4 or come down for this B wave over here for that, okay? While it stays up here, it's got a chance to move up higher here, but to move up higher while the US dollar's pushing up is probably not the case. So we probably see that come down into this wave 4 here. There's a case to look at this as 5 waves here, but this also can be counted as 5 waves as well. So it's a bit tricky there. I haven't really resolved it. We're at this 50-60% retracement level. We're at 17 here. We're going to be here. We're either got wave 4 or we're going to be looking down at an ABC. So we'll either go up here and then come back for this ABC pattern, or we come down here for this A wave to here and down to this point here. So yeah, let's just see how that plays out here for that. But this whole move up here as an ABC, I'm looking at it as a wave 4. I know that silver has got the possibility to move up higher as well, but we still need to confirm that as well. This is silver on the weekly chart. There hasn't really been any sort of movement on this so far, but we can look at this here as, well, it's in 3 waves, isn't it? So we can look at it as an ABC, or we can look at it as a as the first impulse wave to the upside as wave 1 and 2 here, and then going up for 3. We still need 4 and we still need 5. So if we got 5 waves here, right, if we got 5 waves, then the market would pull back as an ABC pattern. I'm dramatizing the size of it. My technical skills for drawing are not that crash hot, but then we could go long. If we got 5 waves here, we can buy back at the 61.8%, and we can just build in from that point there. So that's what we're waiting for here. So there's still a fair bit of time to go before we've got any positive confirmation that will go from B to C up here on this. It's just not there yet, and we have to be a little bit mindful of things, because of this spike here. This could chuck a bit of a spanner in the works. This could be this is the Wall Street bets dudes, so not highly traded within that space there. So, but it could be down for 1 here, back for 2, then down for 1 and back for 2, and then 3, and this comes over here to 4 here, and then we go down again here. So it's not all stitched up and ready to go at this stage. But if we get that 5 waves there, well, then that's our confirmation to go long, and we'll have plenty of time in that long trend over this side over here as an A wave here, a B wave over here, and a C wave up here. But we're just not there yet. It comes to the metals, so we're going to have a look at copper, lithium, uranium, and nickel. And it is possible to look at this as wave 1 here, and then an A and a B and a C for wave 2 here. But obviously we need to see this push up higher at this point. There's also a case for looking at this as wave 1 here and 2 here, and 1 here and 2 here. I was looking at that, I think maybe on the 100 tick, so I'll just go in there. So it's a bit I need more pattern here to give me some sort of confirmation on this, but let's just go in here and have a bit of a look at this point. Need a bit more. So this move to the upside here, I've been considering it being wave 4. I can look at it down for wave 1, back for wave 2 here, and then 1 and 2 and 3, 4, 5 here for this green wave 1, and then back for wave 2 here. So 1 and 2 and 1 and 2 here, and then down for 3, 4 and 5 down for wave 3 here, and then have a wave 4, and then have a wave 5 down here. So 1, 2, 3 in blue, 4, 5 down here. So that would be the downside thing. The upside thing, we can look at it as wave 1 here with an A and a B and a C wave here for that, for wave 2, and then going up at this point. We could also look at this and bring wave 4 across here as well, and look at this as the A wave here, and A, B, C for the B wave, and going up for the C wave. So you can see that there's a few counts that can play out here. So I don't know which is which at this point. I mean, if this top here gets taken out, because from this top here down to the bottom here, we can look at this. Well, the 61.8% will be about here, I guess. But so it's a little bit above, just eyeballing it. But up above here would eliminate this 3, 4, 5 business down here. Wouldn't eliminate it totally, because it could still be the A wave here, the B wave in blue, and the C wave up here with this over here as well, and then come down from that point. So there's a fair way to go with all of this just yet before I can sort of figure it out. If it's staring you, if the answer's staring you in the face, then let me know. Over to lithium. So lithium, I think it's still got further to come down, but I think we need a good solid bounce off these old lows here and off 65, the medium level. So I think there's nothing really to do here. I know that the lithium stocks are not ready to go long on yet. I mean, I look at them every day on the Australian video, and you can see them there. We cover a couple of US ones and a handful of Australian ones, and they're just not ready yet. There's different ways to count this. I could even put this wave A down here. If you've got this down here, that's fine too. With all of this, there's different, yeah. But because this is pulled so far down here to this place here, then, you know, getting some bouncing material off here somewhere, doing this kind of thing until we're coming down here, and then climbing, you know, trying to get back up here and getting support here. That's basically where we're looking at over here to go long on lithium. It's just not ready yet. And as I mentioned, I could see that with stocks as well, quite clearly. So it might not be as long as I've just drawn out there then, so don't worry about that. But we're not there just yet. I mean, it could be as simple as wave 1, 2, 3, because we've got 5 waves in here, 4 and 5, and having one more dip down here, and then we're good to go. Do you know? It could be something like that. But even as a wave 4 here, we still need a bit more time here with this, and you'd expect that bouncing off the low here. So uranium's much the same as well. We can come further down, I'm probably exaggerating that there as well, but I don't have 5 waves up here yet, or as this is coming up pretty quickly here, a bit too fast. This is moving, the speed of this compared to this, it's just telling me that it's corrective. But even as a 5 wave, we need 1 and 2 and 3 and 4, and if we got a push up here, that would give us, I'd go into the intraday then and have a look if that gave us 5 waves, but then would also come back again before going up again, you know. So we'd need to get that in there if we're going to go long from that point. We could look, I've got wave 1 up there, we could look at this as wave 1 and back for wave 2. Not a very nice wave 2, but a bit more, it looks a bit more impulsive to the downside. But if we do get a push up here, then we'll look at this in a bit more, you know, we'll look at this on the intraday basis and check it out. The nickel market here, I've got it as wave 4 up here, but this is not really confirmed at that point. If this low gets taken out here, this one here, then we can confirm that situation. And I was looking down at this as wave 1 with an A wave, a B wave, and a C wave up here for wave 2, and then coming down for, well, 3, 4 and 5, something of this nature here to finish that off there for this. But at the same time, we can look at this as wave 1 here and ABC for 2, and then wave 1 here, and then probably an A, Yeah, I suppose. I just don't like it as a bullish pattern because this is too big here, and this is pulled down too deeply here. This pattern's too big for this leg here, so it could be 1 and 2 and 1 and 2, but it's not looking like that, you know. So still, we need to confirm it one way or the other at this stage, and you know, just really been waiting for that. If it shows a bullish pattern, well then fine, we'll look into it. I mean, we could look at this as the A wave here, the B wave here, and the C wave here for wave 2. That's doable, and put wave 1 up here, and then look at this as wave 1 and 2. But you know, I'm expecting this to be in 5 waves anyway. So if this gives 5 waves up there, when it pulls back, then we expect it to come down. Anything above that, then we can be bullish. Okay, that would be the way to solve that problem. But we're not there yet on that, so we'll just chill. And the crude market, we talked about this last time we spoke, yeah, I could count this down here as an ending diagonal triangle, this whole move down here. We pulled it all that apart and look for this to be the low in place here. This move to the upside here, currently we've got what we're looking for. We've got 1 and 2 here. This is a nice looking 3rd wave here, but the reality is it's just in 3 waves so far. So we would need to see at wave 4 and then wave 5 here. If we get that 5 wave structure, then we're going to get an ABC pattern. It probably may pull back to the 61.8%. If we get 5 here, then we'll get another 5 over here, but we don't know that yet. We talked about being long above that high on the intraday basis, so if you've got that, that's good. But let's just continue to cruise in here with this. So I mean, you know, OPEC plus, which includes Russia, of course, have cut production by 2 million barrels. Strange the Saudis would do that, though. You think they would be sort of being a bit more neutral. Still, they're probably trying to cash in before all the cars turn electric. Right, where are we with this? So I think, I don't know if we're on 10k tick or 5k tick. We'll just check. Okay, got it right. So yeah, wave B up there, 1, 2, 1, 2, 3, 4, 5 for the 3rd, ABC for the 4th, ABC for 1, ABC over here for 2, and then ABC for 3, ABC for 4, ABC for 5 down here, 5. So we called all that in, talked about going long above wave 1 here because we had an impulse wave. And then we're chopping up here. I haven't counted this here, but it's normally wave 3 that hits on the level. So at 90, which is medium level, we'll see some sort of reaction. So I wouldn't be going long. I mean, of course you can go long and do anything you want, but just to let you know that we need to go through all this topping period over here. So on the top here, we'll have the arrival, the reaction, the first high above the level, the ABC correction, and then if we do get that 5th wave up there, then we'll be going up at that point. So we'll be looking at the basic pattern here, the arrival, we're nearly there, then we'll have the reaction, wave 4, wave 5, ABC here, and then back over here. So if we get that 5th wave here, then we'll be bullish for the longer term up on that space. So that's quite exciting. Let's just see how that, you know, plays out here. If you're long here, then 90 is your target. Getting out at 8.8 or taking part profit at the 8 here, 8. I mean, it's $90, so 880 here. That would be where the bids will start getting smashed at that point. So that's that, and then we go over to gas, so natural gas. So rightio. So we've been tracking 2 counts, so I just sort of need to go over this quickly, briefly. Let's just shore up that. I can't remember what I've done with all this. I haven't updated all the charts here, but there's a couple of things that we're looking at. We're looking at, well, you know that we're looking up here long term for 5 waves for the A wave up here, or wave 1, but steady as she goes. a B wave here, then up for wave 1 here, and then an ABC pattern coming back for wave 2 here. So we definitely need to see it push up from this particular low here. It does appear that we've got like a little impulse wave there, so that's a good sign for that. This down here, you know, it's a little bit tricky to count in this here. When I say tricky, I mean it means that, you know, you could view it in different ways. It's not straightforward. And also this here looks pretty straightforward in terms of 1, 2, 3, 4, 5 here, but this could be, this when you really pull it apart here, this can be counted differently as well. But look, if crude's going to push up and the dollar's going to go down, well then that might help this push up here a little bit. So we'll have a look at the long side, but I think there's a couple of things that we need to look at with all of this here. The other side to this is that this move here just becomes a wave 4 to here and comes down, or we have an A and a B and a C wave here like a lot of the other markets are going to be doing, and then come down from that point. So this is what gold can do. This is what's other commodities can do. It's what stocks are basically going to be doing as well. So we need to be a bit careful about that. So there's other markets that still need to come down. So we just be a little bit careful about this. Yeah. So in a nutshell, we've got wave A here, and then B here, then 1 and 2 here. That's possible. So we need to sort of continue to work on that move if it's going to move to the upside. Otherwise, we look at this as the A wave here, an A, B, and C down here with an A and a B and a C wave here for that. So we've got those two counts. And this one here is the A wave over here with the smaller A here, B, C for the B wave, then down for 1, back for 2, and down for 1, 2, 3, 4, 5 here for the wave 4. That would be an ABC pattern here. I suppose you could look at that a little bit differently within here, but it does giving us a nice sort of move. Whoops, daisy. It's giving us a nice little impulse wave here for this. So this is kind of what's happening for a lot of other markets, but I could go 1 degree smaller here because I don't particularly like putting that wave 1 there. It actually sits better here and this here. And in fact, I think I'll do that. And then this one here, just bear with me a second. I've probably got this count sitting somewhere else anyway, but doesn't matter too much. And then that would make this one wave 3. I mean, while we're looking at a bearish count anyway, and that's 4 and down 4, 5 here. And that would, I'll clear that out here for a moment. Don't need that. That would come over here. That would be here somewhere. That would be over here. That can go in here. That can go over there. That can go here. I mean, it kind of looks like a triangle here as an A, B, C, D, and E, but this move here and this move here appears to be impulsive. So, yeah, it's a bit tricky. So we can have that as wave 3 here, and I'll just check on that wave 4. That would leave us at this one here. That's the 38.2, so we wouldn't want to see it going much further than that. We'll just check what that is anyway. So we just have to watch out. It doesn't matter if this is right or wrong, but it's possible. So we need to, if we're going to go long, we need to know what the short count is, and we need to basically negate the short count so we can be safer on the long side at that point. So it'll be something like this. Will be something like this here. Let's just have a look at the 2-tick chart. Oh, I did it here anyway. Oh no, I did this slightly differently. Oh, okay, right. Okay, right. Oh, okay, that's a better fit actually. One, two, 1, 2. Okay, so I've sort of forced it in here to fit like this. Okay, well that's cool. Well, if that's the case, then we can look at this being wave 1 here. I don't know if that's the right degree of structure at this point, and then we'll look at this being wave 2 back here. You just got to be careful, that could also be an A wave up here with a B and a C wave over here, so we need to watch this one over here, but it doesn't stop us from being long at this point, so we can look at this coming back into this space. No need to buy in the box because we really want to gather a little bit more evidence before doing that. See, this pattern here is exactly the same what's happening on the stock market. So you can look at this pattern here and compare it to the S&P 500. Anyway, we're looking for some sort of move down and then a move up from that point. So let's go into 100 ticks and just have a quick look at this here in a little bit more detail and look at how we can go long here. So on this chart, we just really want, well, I've got 2 counts on here, so we got a low in place, so we can have some sort of wave 4 here. So the other thing here is yeah, the thing that we got to be careful here is that I can count this as 5 waves up, 1, 2, 3, 4, 5, and then 1 and 2, 1, 2, 3 here, nice third wave, 4, 5 here for that. And then this one here, I'm not quite sure, but I was thinking that 1 and 2 and 3 here, and then 4 across here, then the 1, 2, 3, 4, 5 up here. I'm pretty sure it's 5 waves. It looks pretty good, you know. And we can look at this coming back here as an ABC pattern, or just map it out a little bit so it's a bit helpful. And then we're looking for 5 waves down here somewhere for that C wave. We could probably look at this as 1 and 2 here now, and you can see the little 5 waves in here, so that will be Mr. 3 and Mrs. 4 and the 5 kids, and that's all good. So it'll be something like that. So what you could do, because you could buy in the box here based on those 5 waves, but I do wonder, this here, is this some sort of A wave here, B wave here, and C wave up here? That's the trap, because we're looking at something like that for the S&P 500, if you've been following any of that. So got to be a little bit careful about things. So in terms of being careful, let's just assume that this is 1, 2, 3, 4, 5. That might be 1 and 2 and 1 and 2 and 3 and 4. It might be a little bit different, but what I was thinking is that once this finishes down here and then starts to move up here, you can use the 7,000 as a classic trading levels pattern sitting here somewhere. So look, it could be like that, just pop up. That's all you're looking for really, is that first high above the level, right? And you can go long above that. And then somewhere along the line, you might find some other type of thing that you could work on, like if I couldn't get that one or that one or that one, and it dropped down here again, then I'd be working that again. So I may have gone long here with the stop here, or if I got that, I might be going long here somewhere with the stop here, something of that nature. They're always a little bit different, and you've got to go back and have a look at the personality of things. This one here is a kind of a good example as well. It's pretty rough and ready, but it came down below the level, like this is coming down below, and then it had to get back up there and find support. So look, I may have gone long based on that little high here and gone long here. I know it's a little bit small, and gone long here, and then eventually come down here, and I would have been stopped out. If it comes through the level that fast, I would have been stopped out. But then I would have gone back again in here, and I would have thought, okay, I've got this high here now, so I'll use that one. and then I'll use this one here, and then I've been triggered in here, and the market's moved up, but it's come back here. So keep the stop under this one and then under this one. And if you get stopped out again, then do it again. Then you've got this high, and then you got this high, and then you got this low here. So you kind of, you know, this is really volatile, this situation here, but it just gives you a bit of an idea of what, you know, the energy market is like, because it is a tricky thing to trade. I always find it's too volatile for me. I'm a scaredy cat for these markets, the crude market anyway, and this. So yeah, but in your own way, you got to kind of see if that 7,000 becomes support and use the first high there. That would be the safe trade to the long side. And even once you have that, it could be that this is just an A wave and a B wave and a C wave up there. It could be wave 1 and 2, but we don't know that yet. You know, there's still more work to be done, but at least you'll get this based on that 5 waves there, and getting support here would help confirm that's correct. Then you just get one leg up here. So getting from 7,000 to 7.5 would be pretty good. You might even get higher here. The length of this here should basically repeat itself over here. So yeah, 7,650. You might even get pulled up if it's a third wave going up here. Well, then you'll get pulled up to that point. So yeah. Anyway, between 7,000 and 8,000, you got 1, 2, and 3 that make up Group 1. Then you got 5, and then you got 650, 720, and 8 there, all the levels at that point. So I'll just leave that at that. I'm just going to remove these. I need my objects on the chart. I'll move that. Don't need that. But that's where that is. So we've got our first impulse wave there, but it could be part of this, the same sort of pattern that we're going through with the S&P. I'll leave you to consider that. So if that's the case, you really want that 7,000. Once it comes here, you really want that 7,000 as support. So just make the trade very small, because really you've got Group 1 here, which is 100, 200, and 300. So if I was trading it and I'm putting a bet on, I'd be splitting it into 4, 1 on 7 here, which is never going to be right on 7 anyway, and then on top of 1, top of 2, and then top of 3 here. And then you'll get to the 5 here. When you get to the 5, you've got a choice. You can either take money off the table, or and then, you know, get out and then get back in on a classic trading levels pattern and then go up again. It depends on where you feel like you are within the structure. You know, you could be in the third wave somewhere, so there's no point in getting out. You know, let's see how this plays out here for this. Yeah, you just got to be careful, because it could be something weird like this. You have the 4th wave here, a 5th wave here, and this becomes wave 3 over here, like we're doing with the US markets, and the A wave, the B wave, and the C wave here, and then we just keep on cruising down here. So there's a few things, you know, it's not set in stone yet, this situation. Alrighty, cheers.